The stock's off to the worst start that we've seen since 2016. We had the S&P 500 down about 1.5% going into today's trading day. Now, despite all of this and some of the worrisome signs out there, RBC capital market strategist Lori Calvasina out with a new note this morning, raising her year-end target for the S&P to 5150. That's up from her initial view of 5,000. Our very own Myles Udland is here to break all of this down. And Myles, you were on with us a couple of times last week just talking about some of the negative sentiment in the market over the last several days, yet Lori saying there's still reason to believe.
I think my favorite part of this call is it's actually a slight downgrade for RBC's view relative to where it was set in November. So when they came out with their 5,000 price target in November, it implied about a 10% increase in the stock market in 2024. Given the gains we've seen, and this was really the theme of all of our conversations last week, Shauna, was given the gains we saw at the end of 2023, how does that shape the 2024 outlook? So now RBC's really looking for 8% gains. So, and it's a tough needle to thread, I think, for a lot of Wall Street strategists. And we've seen this is the fourth strategist who raised their year-end price target in just the last couple of weeks. So I think it's an odd game, right? Trying to figure out where stocks are going to be in a year. And we all know the data that 10% average return, but rarely do you actually see a 10% return for the S&P. So going to be some challenges, I think, for strategists over the coming year. But really looking at a downgrade of the market, though you have an increase in the price target. And it really comes down to how much multiple expansion does RBC and other strategists, how much they think is left in the market. You're still looking at about 22 times forward earnings at the end of next year, which is where we ended 2023. So essentially the market does not want to give companies more credit than they are earning with their earnings, if we can follow that one through.
Yeah, and exactly.
I'm with you.
Well, I mean, that was one of the main points in their executive summary, too, talking about the earnings outlook good enough to justify another year of gains, yet also restrains their enthusiasm on 2024 performance. And they were looking at to some of the other factors that, even when you've got this much optimism, could be perhaps dampeners on that performance.
Yeah, and we're really in the sweet spot for this. Like, are people too excited about the stock market so that I want to be less excited about the stock market? We can go through. They had a bunch of interesting numbers around sentiment, what are forward returns typically when sentiment is this level, so on and so forth. But I think an interesting kind of good but tempered call, if we want to call it that, for this morning.
Cautiously optimistic.
Everyone's
Really
always cautious. That's the right way to be, right? Let's go through life cautiously optimistic.
Exactly.
We'll be fine.
Thanks so much for joining us here this morning. Yahoo Finance is Myles Udland.